So for those who are expecting about candle range theory, so if you come to day nini, let me use the example of gold. Yeah, always focus about candle range theory in higher time frame. Another time frame like 1 hour, whatever. Yeah. So if you look at 4 hour time frame, let us use the example of this 4 hour time frame. We can actually mark the previous candle high and low of 4 hour time frame, because whatever the candlestick in daily, weekly, monthly, 4 hour, 1 hour, 30 minutes is arranged in lower time frame. So the 4 hour time frame candle is arranged at a lower time frame. So the previous candle of 4 hour time frame is arranged in lower, is a candle range high and low, lower time frame. So it is so simple. Not a must they are how many candlestick. Maybe someone has more good explanation than mine. Let me mark the previous high and low of the 4 hour candlestick. Yeah. I know some of you have been teaching you this concept, or you just want to find who the next day, whatever you mark the previous day high and low, the previous week high and low, the previous 4 hour high and low, then yeah, they work, but what is the order flow of the market? What is the trend of the market? Is it buy trend, an upper trend, or downtrend? With this, it has been upper trend. So what are you expecting? But remember the market, the market of Euro USD, the market of gold, it's on a safer haven. So at this point, you can say that I'm selling or I'm buying. The only thing maybe you can do is marking the previous high and low, the previous candle high and low of maybe 1 hour or 4 hour, then expect where you are continuing higher from all of them. So I've marked the previous candle higher and low of 4 hour time frame. So I just want to partition it in order to find the clear direction of it. Yeah. Let me do so. Yeah. Now I've partitioned it. But how can I know that the new formed candle for sell in 4 hour time frame, it has started at this point in lower time frame? So I am supposed also to mark the recent candle higher. Yeah. So I will change its color. Do that one. Again, then I will partition it. Someone said okay. But for daily traders, this is how you have to find your buys. It is so simple to find your buys. Now I will go to lower time frame, that is 15-minute time frame, or any lower time frame, even maybe it's 1 hour, whatever. So for this case, I'm choosing 15 time frame. So in 15 time frame, if you are trading and you mark the previous candle low and high, what were you expecting at this point? It is very simple. Let us mark it together. Let me mark the fair gaps there, because I always use the fair gap to trade. We have this fair gap that has not been traded into. This one that is overlapping with the previous higher. Let us mark it. Yeah. That's the example I've used. Not like That's the example we used. Because we could have even gone to 1 hour. We could have gone even to 1 hour and see. Because if you go to 1 hour, you will find this fair value gap clearly representing itself. So the other 15 minutes time frame is an overlapping fair value gap with 1 hour fair value gap. Actually, let us use the 1 hour. Yeah, that's 1 hour fair value gap. So in 1 hour time frame, I just want to give you this concept. Oh, in 1 hour fair value gap and time frame, this fair value gap is not overlapping with the previous higher, as you can see this point. Let me stop using this. This 4 hour fair value gap is not overlapping with this week, a previous higher, as you see. Actually, the overlapping of it, that's where the market retraces back and continues higher from. But that means that fair value gap was respected by market makers and by the price. But if you want to get the clear direction when the market came back to it, where will it continue high from? Then you mark the board of it, because the fair value gap is overlapping the outside part of the candlestick and outside the fair value gap. Yeah, the previous high is overlapping with the premium side of a fair value gap. So we mark the board of the previous higher candle. This one, let me mark it as you are looking at it. Instead of marking the wick, because the wick is overlapping the premium side of the fair value gap, we mark the body. And when you look clearly, that body is it's almost the order block. It's near to the order block. So that area, the market always comes back into it. I'm not a good teacher, but what is likely to happen, the market will come at this point. When it came to this point, it will continue higher from it. So for those who will trade Monday, expect this to happen. Yeah, that is a real catch. Expect the market to stress back to 25.70, then you continue higher from there. Unless and otherwise, it continues low from there. But if you want to go down and check if it will, then we can. But I'm expecting the market to come back to 25.70. We continue higher from there, or we continue low from there. That is if the 1 hour or 4 hour fair gap will give us a bearish fair value gap to give buyers and sellers opportunity. So for those who enter sell, that's what you are supposed to target. The 4 hour fair value gap is more stronger than 15 fair value gap, so we go with the 4 hour time frame and with the 1 hour fair value gap. So the 1 hour fair value gap is stronger than 15 fair value gap. So we expect to go low from there. And when you zoom it, you realize that still in that 4 hour time frame, we have another fair value gap at this point that has not been traded into. The fair value gap that is not touched at all. We can't say that it was respected. We cannot. Why? Because this candle, this candle of sellers didn't even came near to that prefer and wicked. No, but this one was weak at this particular point. So what do you expect? Obvious, this fair value gap, the first one, it is not strong enough to hold the price. So So if it's not strong enough to hold the price, then on Monday we may come back to this area, that is 25 to 23, then we continue along. The, that is it. So if you are trading using fair value gap, always remember on sell side, on sell side, on sell side, these are the premium side of our fair value gap, and these are a discount. So when you want to continue higher, you place your order at this particular point. And if the market was offering a bearish fair value gap to continue low, then you could have placed your order block at this particular point, at that premium, at that discount area of a fair value gap. But for the bullish, for continuation of buys, you place at the premium side of it, because mostly the market came and is sting into it and continue. Hold some touch and continue. So in order your orders to be activated, you have to place your orders at the right place. Let me go back. I used 4 hours, so actually let me see that fair gap of 4 hours, if it is that strong. So if you go to 3 hours time frame, you realize we have this fair gap. So the market will trade up to this point. Yeah, up to this point. And now my big question is, will this order block hold the price, or that order block will act as a sky? I mean, let me, yeah. Now for those who are going to trade on Monday, I'm expecting we sell up to that point. We put our stop loss this particular point. So with this 3 hour fair value gap hold the price, or it will act as a rocket, like as a fueling the market for the market to continue higher. But again, what you have to know that is a new week cannot to be formed. Yeah. So it might act as a doji. When it has acted as a doji, it means the market might not reach at this point on Monday. Maybe at this point, if it consolidates. But if the market reaches this point at Monday, then you expect more selling. That is from daily, for time frame. Yeah. Why am I participating in that? Because when you use a fair value, you try to see the one that is strong enough to hold the price. I've gotten out of the point because I was explaining something else. Yeah, but at least I've given a strategy on using the fair value gap. I get time to explain more on it, because for me they always work perfectly 100%. Yeah. And what was I saying? So it doesn't mean that when market come at this point, it has to tell us no. Remember, we have order block, we have liquidity. So what do you expect? It may go deeper and then continue higher. So that is it. And what was I saying? Yeah. So actually, this point is so stronger. This fair gap is stronger to hold the price. So for those who go through this video, mark this point. Mark this point. Mark this point on Monday. Look for sales. Look for sales. Yeah. So in order market to reach at this point, it will offer us another fair gap for sales continuation. So yeah, a bearish fair value gap. But on Monday, wake up looking for sells, unless and otherwise. If you ask me for testimony on an usage of fair value gap, I can say they have been working perfect on me. Yeah, most of my trades have been always on win. I've been always on win. I haven't ever been on a stop loss. Me and my stop loss, we don't know each other. We don't know each other. We don't know each other. So, so this will work out on Monday well, because when you go to 4-hour time frame, we also find that 3-hour fair value gap is overlapping with the 4-hour fair value gap. So what do you expect? You expect to go back to that point. And therefore, remember, these previous high is overlapping with the fair value gap. So this area is likely to be stronger. It will hold the price again. Yeah, it either hold that price again to continue higher, or the market break and continue low. So watch out this zone on Monday. So I will extend this to this point. So next week, let us see if we graph this on our charts. Yeah. What else have I not touched? I was talking about candle range theory. It has supposed me to speak about all this. Again, it has offered that chance of having a setup for Monday. Yeah. So on candle range theory is all about and higher time frame candle, then that range is it's happening on lower time frame. Yeah, so that is it. That is it. Same concept in all pairs and other things. I'll explain something about filtering process on analysis. So for today, let us have it.